So the point behind tonight's class or tonight's session is not just the regular market review kind of thing, all right, but the purpose behind tonight is to also get us to be able to see the market from the perspective that I see the market, all right. So I'm also going to be doing a little bit of teaching alongside the analysis, all right. So we'll do analysis then teaching so that you can begin to follow through my analysis process, all right. And by now, if you've always attended our weekly analysis, weekly market review and analysis events, you already know by now that this is what we do, okay. So we're going to be starting with the indices, all right, with the currency indexes, all right. However, I'm going to be showing us, a step-by-step approach to market reviews, all right, a step-by-step approach to market reviews. The webinar we had yesterday evening, all right, I was able to show us some of the tips that I use to find high probability trades, and then I'm going to be, hammering more on those things tonight so that we can just reinforce that information in our minds. All right, so that's the first thing. So we're going to be starting with the currency indices, and right here we have the AXY index, which is the Australian index, all right, Australian dollar currency index, and this is the weekly time frame. Now, remember yesterday we started by talking about we started by talking about the multi-time frame analysis approach. All right, we started by talking about the multi-time frame analysis approach. And all right, we started by talking about multi-time frame analysis. All right, and then we're able to realize that it's better to get a swing of the overall direction than find lower time frame confirmation and entry. All right. So at this point, I want you to begin to think of, analysis, all right? Think of trading and analysis as though you were trying to, cook a delicious meal, all right? As though you were trying to prepare a delicious meal. Now, the truth is, before you even step into the kitchen, all right, before you even step into the kitchen, the first thing that you need to realize is that before you step into the kitchen, you already have an idea of what you intend to cook. All right, you already have a picture of what exactly it is that you intend to cook. All right, so that becomes what the higher time frame bias actually is. All right, it is that image that you have in your mind of what you would love to eat today. All right, so what we do on the higher time frame, say on the daily time frame, weekly time frame, for example, is to decide, what do I want to eat tonight? All right, what do I want to eat tonight? So based on what we're able to find on the lower time frames or on the higher time frame, all right, we can say, oh, all right, the question begins with something like, okay, what should I have for dinner? All right, that's the first question. Then once I have decided, all right, this is what I want to have for dinner, the next question becomes, please mute your mic. Please mute your mic. If you have any questions, please put it down in the chat box, please. All right, so it's like wanting to be able to cook. All right, you're just trying to get something to cook for the night. All right, the first thing is, what should I have for dinner? All right, then the next question you ask would be, what do I need, all right, to prepare the meal? And this is the point where we begin to talk about, the recipe, all right, getting probably a recipe book or whatever it is, knowing what the recipe is that would get you your desired result. Okay, so say, for example, if I'm going to be having pasta for dinner, all right, I need to now decide, all right, what recipe am I going to adopt to be able to make the pasta? All right. And then once that I have decided on the recipe to do, then this is where I begin to say, putting all the pieces together. All right. And this describes, the process where I'm, preparing the pasta, making the sauce, all of the things that, probably, if I want to take it with probably lamb chops or ribs or something, preparing all of the pieces that would make the meal beautiful. All right. Now, the next thing is that you need to know when the food is done. All right. You need to be able to know, yes, at this point, the food is done. All right. And I can now eat it. All right. So, for example, when we're still talking about pasta, there are certain people who love their pasta, a little bit soggy and, really succulent. All right. Some other people love to take their pasta a little crunchy, not really crunchy, but a little bit, dry and a little crunchy. All right. Some people love their pasta that way. All right. Some people love their sauce spicy. Some love their sauce hot and spicy. Some love it just spicy, and some don't even like anything spicy as their sauce. All right. So based on your preference, so you begin to decide, all right, what do I want to eat? All right. Then you decide, all right, what are the ingredients that I need to prepare the meal? And then you can now put all of those ingredients together. And once the ingredients are coming together, you then ask yourself, how do I know when this food is ready to be consumed? All right. So applying this into trading, let's take it one step after the other. All right. Putting this into trading, let us see how this looks now. All right. So the first step is, what should I have for dinner? Which is simply, what is the overall direction? All right. This overall direction can be gotten on the daily. You might even start from the weekly time frame, although for day traders, all right, and intraday traders, I would advise starting from the daily, 4 hours, 1 hour. All right. So what exactly is the overall direction? The next thing is, what do I need to prepare the meal? All right. So this is where your confirmations comes in. All right. What are the technical confirmations available? All right. And here we start talking about whether it's whether it's an high probability order block, which is also called my FOB, which is the Fibonacci order block. All right. Whether it's that, whether it's um, accumulation. All right. Whether it's an accumulation that is broken out of. All right. Whether it's a break and retest. All right. Whether that is what we have, or whether what we even have is probably market structure, or break of market structure, or whether what you even have is probably shift in volumes. Some people trade like that, shift in volumes and momentum, which we can also call divergence, convergence. All right. So you decide what are the technical factors that would give me that would come together to give me this. All right. Then the next thing is you're searching for confluence zones. All right. Based on the ingredients that you already have. All right. So you're looking for areas where you have multiple confirmations coming together. All right. Where you have multiple of these confirmations coming together to play out. All right. To give you a market directional bias. All right. So once you have decided the overall direction, then your technical confirmations, then you go down to the confluence areas, which is where we talk about putting the pieces together. All right. So these confluence areas becomes what we use for our entry confirmation. All right. Or for our entry. All right. Our entry point. So we enter from areas where we have a confluence of technical factors. All right, a confluence of technical confirmations, and that's basically for those who run technical analysis, price action analysis, and the likes. All right, so you look for these kind of areas to be able to get in on the trade. All right, and then the last thing, which is knowing when the food is done and can be consumed, is simply referring to the fact that you need to know. All right, you need to know where to take profits or when to take profits. All right, and there are a couple of factors you might use. If you are like me, you could use your market ratios. You could take profit based on market ratios. All right, you could take profit based on break of structure. All right, you could take profit based on risk reward. All right, risk reward ratios. You could take profit based on target prices. All right. So all of this are things that you can begin to do right from now. Okay, simply because now what you're doing is that you are beginning to see the chart as though you were just trying to prepare an amazing meal for dinner. All right, you're just trying to prepare an amazing meal for dinner. All right. So please, if you've gotten me this far, all right, if you understood what I've explained this far, please drop an emoji in the chat box. All right. Let me know that you're following me and that you understood clearly what I've explained so far. I'm waiting for your comments, please. If you understood what I've explained so far, just drop an emoji in the chat box. Let me know that you've gotten me and that we're still together. All right. That I've not lost you at any point. Hello, I'm waiting. I'm waiting. I'm waiting. I'm waiting. Yes, of course, of course. That's also part of it. Yes. That was what I was talking about in one of our first classes. All right. I think our first class on the champions group. I explained to you that areas of chart patterns or chart patterns in codes are actually areas of accumulation. All right. It's a market range that was formed and broken out of. All right. That's all that chart patterns are. All right. So that's why I didn't mention chart patterns per se. All right. But I mentioned areas of accumulation. All right. So accumulation leads to distribution, which is why chart patterns work. Okay. So, all right, beautiful, beautiful. I believe that we all got that. So right now we're going to now follow step-by-step approach to putting together. Now, remember, I said that the second item. Yes. That's what I meant by market ratios. That's what I meant by market ratios. What we use our own Fibonacci for, unlike what majority of the market traders do, is that we use our Fibonacci for market ratios, all right, to break down the market into waves and ratios, all right. So that's why you saw me write market ratios as when to know, as when to take profit, all right, knowing when to take profit. Now, remember when I mentioned this, I talked about getting a recipe book, all right. When you want to cook, you get a recipe book that gives you a step-by-step approach and tells you, okay, when you get a measure of this, this is what you should do. All right, a pinch of salt here, a little bit of vinegar here, a sprinkle of a sprinkle of this, a sprinkle of that, chopped vegetables, cabbage, whatever it is that you prefer to take. All right, so all of these things is what we're going to look into next. All right, we're going to formulate our own recipe book for market analysis right here, right now. All right, we're going to formulate our own recipe book for technical analysis. All right, which is where we talked about knowing the technical confirmations that are available. All right, so at this point right now, I need you to follow closely what my analysis process is so that you can understand what we're talking about. All right, so this is the AXY commodity. All right, this is the AXY commodity index chart. And for me, now, these things don't necessarily have to come in a particular order. All right, it doesn't necessarily have to come in a particular order. But one of the first things I do is to find a range. All right, see if there's a range, there's a visible range. All right, that could be either say a channel, that could be a triangle, a wedge, whatever, whether you call it a chart pattern or something. But I first of all try to identify if there is a range. All right, if market is currently ranging. All right, so once I check and I see, oh yeah, market is ranging, oh no, market is not ranging. All right, once I see that, I'm able to then begin to do something else. All right, let's quickly move all of this. Let's move all of this. All right, so we have space for what we want to look at next. All right, so for the last 4 years, there are certain things that I have used as my trading confirmations again and again, and they have always worked. All right, so the first thing is all right, I spot accumulation areas. All right, whether that is accumulation in the form of a chart pattern, accumulation in the form of those trading setups that I gave those of us in the champions group. All right. Which box is that? Which block is that, Mr. Prince? I believe, or I think you're talking about other blocks. Is that what you're talking about? All right, I think that's what he's talking about. I think that's what you're talking about. Correct me if I'm wrong, but I think that's what you're talking about. Now, the next thing is I locate my zones. All right, I locate my zones. Now, when we talk about zones, zones refers to a number of things. All right, there are pivot zones. All right, there are different types of zones. There are pivot zones. All right, which is also known as turnkey levels. All right. There's nothing like having a block at the end of the candle's trend. Other blocks don't necessarily have to happen at the end of the trend. All right. But I believe that we'll be able to look into some of these things. Please just hold on, please. Now, locate the zones. All right. Zones could come in the form of pivot zones. Zones could come in the form of psychological levels. All right. Zones could also come in the form of other blocks. All right, or demand and supply. Okay, so these are the zones. Okay, so This is one thing that I also do. Then the next thing is, now, once I have spotted areas of accumulation, all right, and I've located my zones, all right, one of the next things that I do is I break down the market from the higher time frame, all right, then to the lower time frame. Okay, once I've located my zones, then I look at it and identify the current market structure or direction. All right, because what the market structure does is that it tells me the current market direction. All right, like what we saw when we're talking about multi-time frame analysis. All right, so once I have the overall market structure, overall market direction, the next thing that I do is I go to the lower time frame. All right, even before I go to the lower time frame. All right, so once I spot the market structure or market direction, then the next thing that I want to do is I want to be able to identify what's that called now? Now, for this, zones or key levels, all right, locate zones or key levels. Yeah, let me put it that way. Key levels. So then after that, market structure or overall market direction, then the next thing that I want to be able to do is that I want to be able to locate the nearest possible area of price reaction. All right, the closest possible area of price reaction. All right, I'm going to show us all of this as we run through the analysis. All right, so the closest possible area of price reaction. So let us do all of this on the chart right now. Now, basically, these four things are the same things that I'm going to do on the higher time frame and the same things I'm going to do on the lower time frame. All right, so regardless the time frame, this is what I will still end up doing. However, I am only going to, what I want to do is I want to make sure that what I see on the lower time frame agrees with what I saw on the higher time frame. All right, that's the only clause to this thing. You want to be sure that there's a confirmation of what you saw on the higher time frame on the lower time frames. All right, so this is AUD currency index, which is the AXY, and this is the weekly time frame. All right, so we've seen this is the this is like a range that we've seen. All right, we've seen this equal lows. All right, and then we've seen that there's this major trend line. All right, and price seems to be heading towards that trend line. All right, price seems to be heading towards that trend line. So we've already spotted this area of accumulation. All right, we could also describe this as an area of accumulation, seeing that this is a double bottom kind of system. All right, then the next thing that we want to be able to do, all right, now that we've seen this, we want to be able to begin to look for the zones, all right, the possible zones where price might likely react. All right, and one of the things I've taught us is, I think I still mentioned this during the webinar yesterday. One of the things that you need to be able to do is you need to be able to identify your zones. All right, the current market structure, now the overall market structure on this weekly time frame is bearish. All right, but let's go to the daily time frame. I want to show you something quickly. But on the daily time frame, we see that price has already given us a higher high. All right, we already have a high that is higher than this previous high. All right, and it's already looking like the structure currently is bullish. All right, remember though that during on the weekly time frame, what we saw is that there's this imbalance candle and this imbalance candle. So let's go to the daily time frame, break down those imbalances and see if we have solid zones within those imbalances. All right, and one of the stuff that we can see readily is something around here. All right, that zone there is one of the areas that I really want to see. And based on the proximity to the, the Fibonacci level, all right, as you can see, there's the 0.764 level here, all right, and we see price coming really close to that particular level. So we see a possibility of price coming this far, all right, then dropping lower. Now, why is this my bias? This is my bias because now let us look at the confirmations that we have here. One, we have a major trend line on the day from the daily time frame, all right? Two, we see an imbalance on the weekly time frame that we broke down a little bit further to find this particular zone on the daily time frame, all right? So at this point, we can now begin to look towards the 4 hours time frame and then repeat the same process again and again and again and again, just to repeat the same things and be confident in our analysis. All right, so based on what we're seeing on this chart, our conclusion right now is that we should see a little bit of bullish pressure on the Australian dollar, at least for the next 4 to 8 hours, all right, because this is the 4 hours time frame, and we can see that in order to be able to cover this distance, price is going to need at least 1 to 3 4-hour candles, all right, between 1 to 3 4-hour candles, all right. So we could see 1 4-hour candle, the next one, then the next one, all right. So in the next 8 to 12 hours, we should be seeing a little bit of bullish price action on the Australian dollar, all right. So the next thing we want to do is, now that we have done this, especially for those of you that trade currencies, all right, now that we have this bias, all right, the next thing to do is to go all the way back and check commodities that are paired against the Australian dollar. All right, so quickly, before we move on, let's quickly check the British pounds. Right, so let's quickly check the British pound on the weekly time frame first. And as you can see on the weekly time frame, I already had this bias that the pound was going to drop. All right, and I think that this was also mentioned on my YouTube channel. And as you can see, this is a 3% drop, over 420 pips on the pound index. All right, which means that we've seen some weakness in the pound for over the past couple of days. All right, which is roughly about 3 weeks. All right, 3 to 4 weeks. So now the first thing, do we have any accumulation zone visible on this chart right now? All right, so let us see. We have that upper trend line already. Let us see, do we have any other trend line here? All right, we have this this key level sort of area here. All right, we have this key level area here, which is simply based on all of this torches. All right, all right, so we're seeing price get to this point right now. Okay, so the next thing we want to be able to check on the GBP index, all right, on the DXY, which is the pound index, is we want to be able to have an evaluation of what is going to happen at this point right now. All right, is price going to continue going down, or is it going to bounce back up? All right, so we've seen the accumulation. All right, we can quickly spot our zones. I think this is an important zone. All right, so we can refine that a little bit lower. Let's go to the daily time frame, see what's going on the daily time frame. All right, so this is the daily time frame. All right, and then we're seeing that that zone is also quite visible even on the daily time frame. All right, it's quite visible even on the daily time frame. We might want to mark it as this. All right, just refine it a little lower, or better still, I believe so. Mr. Prince, that's my answer to your question. I believe so. I didn't really understand your question, but I think that what you're trying to ask is whether the trend lines have to touch the weeks or not, or whether you need to analyze what is going on at the moment, all right, if it's supposed to touch the current state. Now, this is me doing a live market review, so it's not something that was pre-prepared, all right? So this is just me showing you my analysis process, all right? So this is the daily time frame. We've seen that this is another block within the other block on the weekly time frame. All right, we could see the 4 hours time frame, but I doubt that that would make much difference. All right, I doubt that would make much difference. So one thing that we should be expecting to see, or that we might be expecting to see, would be price coming to take all of this liquidity, most likely. Then we could have something like this. All right, where price returns back up. All right, this is one of the possibilities that I'm banking on. All right. However, there's also a possibility that this does not happen. All right. Reason being that, as you can see, the overall market structure has been bearish. All right. At this point, we've seen all of this on the daily time frame. All right, has been bearish. All right. So there's a possibility that price does not go this far. All right. It might just come maybe this far or something. But this is my expectation on the DXY right now. All right, because we can also see there's this here. All right, so we can expect some price reaction from somewhere around here. All right, so this is DXY. So I want you to get familiar with these things that we've talked about. All right, let's go back to those things. The procedures that we want to follow again and again and again and again to be able to get a concise view of what the market looks like. All right, to be able to get a detailed approach to the market analysis. All right, to be able to get a detailed approach to the market analysis. So this is the weekly time frame, and currently, if you can see this right now, I need you to quickly take a screenshot of this. All right, just take a screenshot of this point that I have listed around here. Just quickly take a screenshot of that. All right. Okay, so I believe that has been done. So quickly, we're going to take a couple of questions. Does anybody have questions they would like to ask? Please type your question in the chat box right now. While the questions are going on, I'm just going to analyze some currency pairs. All right. So please drop your questions in the chat box. While the questions are dropping, while you're composing your questions, I'm just going to rush through, market analysis on all of these things that we usually look at. So this is GBPAUD. Remember, I said that we're likely going to see some increase in the AUD strength. All right, at least to be able to get to that interesting zone that we saw on the weekly time frame. All right, this is GBPAUD. We're seeing some kind of movement here. All right, we've seen price break this trend line. All right, we've seen this structure get broken. All right, and this is on the weekly time frame. So let's go to the daily. All right, so this is the daily time frame, and we're seeing that there's been quite an imbalance formed here. All right, beautiful. The accumulation zones tell us where orders are being gathered. All right, it could be liquidity areas. It could be areas of liquidity. It could be areas of market ranging and consolidation. But the accumulation zones tells us where the money is. All right, because usually accumulations lead to distributions. All right, it's like collecting donations. It's like what NGOs do. All right, they collect donations, then distribute it. So areas of collections tells us that there's about to be a massive distribution. All right, now as to how long an analysis should take before you take a trade, before you place a trade, I don't think there is any time to there's any time restriction as to how long your analysis should take. All right, your analysis will take as long as it requires. All right, don't hurry into any trade. Never hurry into any trade. Let your analysis take care of itself. All right, learn to allow the market speak to you, not you assume what the market is saying. All right, so your analysis should not have a time limit. You shouldn't even approach analysis with, oh, my analysis is taking too long. No, that's not how it works. But the more you practice over and over again, the more you give yourself to practice, at the end of the day, all right, you're going to be able to start limiting or reducing how long you take to run analysis. All right, your analysis is going to take you less and less and less time. All right, and then you can be able to get some really, really amazing results, amazing trading results. All right, so this is where we are at the moment. This is GBP/AUD on the daily time frame. All right, we've seen price break through that. So what we'll be expecting to see is I want to see what price does when it gets to this trend line. All right, because once price arrives at that trend line, we would be having some kind of equal lows with this area, or let me say this pivot zone. All right, so we'll be expecting to see what price does around that area. So on the 4 hours time frame, we might see some bit of bullish movement, at least to recapture some of the imbalance levels. All right, just to recapture a little bit of that. All right, so this would be it. You know, something like this. All right, something like this. So we might see price do this and then come back maybe to an area like this, since we already have this here. All right, so we're going to end the first session here. Please don't go anywhere. The first session is ending now. The second session is going to take up in the next 5 minutes. All right, by 9:45 we start the next session. All right, so don't go anywhere. Join us for the next session. God bless you.